What's going on? What's going on, everybody? Yours truly here, the Brockton credit guy, coming at you guys again with some more credit tips, secret hacks, and budget and finance advice and tips, right? I believe in coming up with this more and more video like this, less than 10 minutes, to kind of give you information, because the more you watch this video, it's going to position you better. It's going to make sure you're aware of your credit and basically position you for better for your financial future, for your family, right? So in this specific video, I want to talk about terminology that a lot of people get confused about. Obviously, none of these means that you're fully guaranteed anything, approval or not approval. It's called PreQualify or PreApproval. A lot of people don't understand them, so they receive it and then they have an idea. I qualify for a $2,000 credit card because I got the letter in the mail. I could just use my code. Not necessarily, right? So a pre-qualify is more like a soft. Both of them are soft inquiry into your credit profile. They just basically did an assessment. Pre-qualify, sometimes they just use public data. They just basically your address, how long you lived there, if you probably you own a house, whatever the case is. Based on that, they just basically say, hey, you might qualify for a Capital One account, right? So it's more like a minimal information that they will give you. Sometimes they'll use like a third-party company. Capital One might use a third-party company or a credit card company to do the marketing strategy for them. A pre-approval, they're grabbing more information about you, right? In the pre-approval part, they grabbing more like your full name, your address, previous address. Sometimes they'll go with your social instead of just your last four, your date of birth, probably your monthly expense or your house expense, right? They're asking you more information to gauge your kind of assess your risk, right? And based on that, they might specifically kind of narrow down which card that you likelihood of getting approval. Not guarantee again, but likelihood of you getting approval. Pre-approval, I see a lot with the mortgage, right? You call a mortgage broker, they're able to look through your for example, your finance real quick, your debt to income ratio, look at your credit. As long as you meet the criteria, okay, you'll be pre-approved for like 300,000, 500,000 based on your income and your credit. Obviously, there's other conditions that you have to go by. Usually, with the credit card aspect, none of them are hard inquiry. With the pre-approval for mortgage, they might run your credit. Usually a good loan officer will go more in depth and kind of give you so-called approval based on other conditions of the underwriter. But both of them are basically a quick assessment based on your credibility, your capacity. I like the pre-approval. So a tool that you could use, for example, Capital One has a pre-qualify on their website. So you just put your name, date of birth, social, and then your address, and we'll spell it out if you approve or not. Kind of give you an idea if you approve or not. And then like Chase has one that's they ask for a little bit of information, last four, your name. I don't even think they ask for your date of birth and address. That's it. They shoot out a pre-approval based on that. However, Discover, I see them asking for like a lot of information. If you go to their website, more like a pre-approval data there. But either one of them is guaranteed for anything. I just want to make sure you understand the difference and be able to to be able to see if you qualify before you go for a hard pull. Before you do that too, before you do pre-approval, what I normally suggest, if you have your account frozen, like your credit report frozen from the credit bureau aspect, like TransUnion, Experian, Equifax, or any supplements credit bureau like SageStream, Minovas, LexisNexis, I would suggest you unblock it or lift the freeze up like that, or unfreeze the credit reporting agency that you frozen for them to be able to access, because sometimes you don't know which one they pull. I would just temporarily lift the freeze, and then you can put it back whenever you're done. But at least it will allow you to see if you're pre-approval or not. Regardless if you get this pre-approval in the mail or pre-qualify, ask yourself, do you necessarily need to apply for that credit card? As good it might sound, that's why there's a lot of stipulation in fine print there. Read it. Do you really need an extra $2,000 credit card? Do you need that bonus? You have to assess your finance and see if you need it. You don't want to go apply, because if you do apply, that's where they'll do a hard pull, a hard inquiry. Yeah, it could ding your point. Depends on your scoring range there that you're at. I've seen 3 to 15 points. Depends the type of credit. Obviously, if you get approved, the inquiry is less effective. You probably only drop 1 or 3 points, and they kind of rebound itself. So, usually what I do, if I need a higher credit line, the credit cards that you already have, ask them, call them up and see if they'll increase your credit line by $3,000-$4,000 or $1,000. They'll probably counter offer for you. I do that every 6 months anyways with all my cards, to make sure, I increase my credit line and have the buying potential so I can lower my utilization. Those are some tips, tricks, and kind of explanation between the three. All right, thank you. Subscribe to the channel, share it, like it, and check other video around there. Thank you.